Hey folks, in today's video we are going to learn about a sentimental indicator which is very helpful for us, especially when we are trading into indices and the highly liquid instruments, especially Nifty and Bank Nifty, which is a sentimental indicator. We will understand all the necessary information related to it. So we are going to learn about the put call ratio in this particular video. So before diving directly deep into the tool, let's first understand what put call ratio is. So put call ratio is very simple. So PCR is basically, put call ratio is also called as PCR. So put call ratio is basically the ratio of puts, and calls. Now what this indicator does is it basically divides the total puts open interest on the entire option chain, and it divides it by the total call open interest. So it gives us a number, it gives us a value which we will be using to gauge the sentiments of the market. Now coming back, it is based on the open interest data, right? So open interest is based upon the trader's sentiments. Whatever they feel like, they will change their positions accordingly in the market. So first, open interest is assumed from a seller's perspective, because in the market, sellers are the ones who are taking a trade with a negative reward to risk. Seller's risk is very high, then seller's profit is very low, then sellers, they need to pay a heavy margin to go ahead and sell that option. Anybody with a small amount of money can be an option buyer, but selling requires huge amount of capital along with a proper risk management and a proper technique to go ahead and tackle the market. So open interest is assumed from a seller's perspective. So let's take an example. When are we going to sell a put? When we expect the market to be bullish. So let's say when we are going to sell a put, so we will sell a put when we are expecting the market to go up or at least sustain on the upper side. If not bullish especially, but at least it should stay on the upper side. It should not crash directly. Similarly, when we sell a call is basically when we expect the market to at least go down but not go up. This is something which should not happen, right? So if I know that in a particular instrument there is a lot more of puts getting sold, a lot more puts open interest which is getting created, the puts are being sold aggressively, versus the calls are not being sold that aggressively. That tells us what? That tells us that in that instrument the bulls are taking the charge. The support is provided by the put writers, but call writers are very hesitant, they are very skeptical to place an order over there, to sell basically a call option over there. So now how we are going to do it? Is it we should go ahead and tally the entire option chain over here? So ideally that is the process, but no need to do that. We have the PCR tool in our application which will give us the entire math of it. It will directly give us the put call ratio for all the F&O instruments. So we can go ahead and first search for our desired F&O instrument from here. So let's say Nifty. So I have selected Nifty over here. So we will get to see what the OIPCR is. So OIPCR means open interest PCR. So it will show us what the current PCR is, what the current put call ratio is. It will show us what yesterday's, which is previous PCR was, put call ratio was, and how the put call ratio has changed in terms of percentage. In terms of percentage, whether the put call ratio has gone up or whether the put call ratio has gone down, it will show us that. Similarly, on right hand side of our screen, we'll get to see the volume PCR. One and the same thing. It is basically the total number of put volume divided by total number of call volume. We'll get to see the current volume PCR. We'll get to see the previous volume PCR, and also we'll get to see the change in volume PCR. So basically we'll get to know whether the volumes are increasing along with the rising PCR or not. So if the volumes are increasing and also the OIPCR is increasing, that tells us the puts are being sold a bit more aggressively. The support has been getting stronger and stronger. So now more the PCR, more the support is, less the PCR, less the support is. Now let's understand when PCR will go negative, okay, or let's understand first when the PCR will go positive. Now let's take an example. Let's say if there is a particular instrument where the open interest is, let's say, 1.8 CR for the puts and the calls open interest is 1 lakh. Okay, my put call ratio becomes 1.8, right? Similarly, let's say in a particular instrument the total puts are 1.3, okay, and the total calls are, let's say, 9, okay, 0.9. Okay, so the total calls are 0.9. So the put call ratio will come around 1.44. Now let's take another example. There is an instrument where 0.8 is the put open interest, okay, CR, all the things are in CR, and the call open interest is 1.2. So my put call ratio in this scenario would be somewhere around 0.6, 0.7, somewhere around that. So that would be my put call ratio. Now if you notice one thing, in this case the puts are aggressive, so that is indicating a stronger support. In this case the puts are aggressive, that is indicating again a stronger support. But in this case the puts are less, the calls are more. In this case the resistance is getting aggressive. So just by looking at that figure, we will easily figure out that whether the instrument is having a lot of put writers or a lot of call writers. First thing. Second thing is, we will try to use this indicator only in highly liquid instruments, especially like Nifty and Bank Nifty. And for every instrument, the data will behave in some other way, which we will try to discuss in the other part of the OYPCRH when we will discuss it that. Now, there are two times when the PCR will go down. One is when the put writers are not aggressively betting, okay, but call writers are aggressively betting. Second time is when put writers are squaring off and the call writers are getting heavy. Now looking at the PCR data, there is a way we can find out whether the market is overbought or oversold. Now there is no static figure as such. In the sense, this figure what we discuss is based on the historical data. So try to use it in Nifty and Bank Nifty. Now how we can identify using that data point whether the market has been overbought or oversold? So we can go to OYPCRH, okay. We will go to a historical data to check how exactly the PCR's historical behavior was in comparison with price, okay. Now in the historical data, we can first select our instrument from here, and then if I want to, I can increase or decrease the data. So in the graph, the green color bars are showing us, the green color lines are showing us the put call ratio on that day, whereas the orange line is showing us the PCR. So if you see, generally it is kind of mean reverting, right? If it is at the bottom, it kind of spikes. If it is at the top, it kind of takes a cooler down approach. Now if I focus over here at this point, 0.7 on the day of 29th of October. So if I focus on this point, which is on 29th of October, PCR is 0.74, right? Nifty's futures was 17,750. Now, this is the point when the market has become oversold, which means that call writers, if you focus on the Nifty's price over here, from 18th of October till this day, Nifty has dropped significantly, right? So market has been exhausted of selling. So there would be a kind of spike which one can expect when the PCR is at its bottom. Similarly, whenever the market goes at its peak, okay. So whenever PCR goes at its peak, that tells us that market has been overbought after a time, that the buying can be exhausted after a period of time. So we can expect a cooler down approach once PCR goes up to its higher extreme. So now how we are going to find out those levels? So no need to be dependent on any random figures. We will look at the historical data and we will analyze that. So if we focus 0.7 level, 0.7, 0.78 is the level for PCR where we can expect a bottom to be formed, because that is what has been happening in the past. 0.77, 0.75 is somewhere where markets have generally took a support, or else to be a bit more aggressive, consider 0.79, even this level, which was never been broken before 20th of July. But the recent data tells us 0.75. But generally what one can do is just try to consider a level of 0.7778. Whenever PCR comes around that, try to be cautious while selling further first. If you want to take a fresh trade, try to go ahead with a spread. So let me just explain that market, after giving a significant rally, it will become overbought after a period of time. Similarly, after market having a consistent significant depth, it will be oversold after a particular point. The markets would be exhausted after a particular time. Now, PCR will help us in identifying those levels very easily, whether the markets are being overbought or oversold. Okay, so for Nifty, at least on the upper side, 1.8 is the level where is the upper extreme of the PCR if we focus on the historical data. So if we focus on the lower extreme, 0.8 and anything below it is something where generally the PCR is kind of bottoming out. But recently we saw a low of 0.75 as well. So consider whenever at the lower side Nifty PCR comes around 0.7677 level. So try to be cautious while selling even further. Okay, because there is a bottom which is getting formed due to a sentimental indicator, which is put call ratio. So put call ratio tool is available in our mobile application as well. UI will almost be the same, data will be the same, and also PCR is a real time tool. So PCR updates in real time out here in Quantsap. So whenever we click on refresh, whatever at that point PCR is, we will get to see that. So do check out PCR on Quantsap and be a data driven trader. Thank you.